Morning, Rhinos. All right, let's have some fun today, right? I know everyone's feeling sexy this morning, because if you're not feeling sexy, then you're just a hard person to please, let me tell you. But let's let everyone get in. Let's see what we have going on today. Let's see how much fun we can have, right? All right, so we see people coming in. We see people coming in. Come in orderly, 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 orderly. Now I'm sounding like a seal, like, or. All right, cool. Let's let everyone get in, get in, get in, get in. All right, let me take a sip of water. You know, I've been really meaning to eat a breakfast bar, and I'm going to right after this. Like, what does your day look like if you have to schedule eating a breakfast bar at 11 a.m. because you don't have a moment beforehand to pick anything up? Because if I chew it, my mouth gets dry, then I can't talk, and then it takes a little bit extra time. Good morning, Bernasta. All right, come on, get in. I see everyone piling in. All right, once we get to a certain number, I get started. We don't say that number out loud because it would just be a lie, right? Like I'm going to lie and say it's 200. All right, we have 200 because you can't see 200. If I said it was like 3 people in here, you'd be like, well, I really don't want to be a part of that group. Except we actually kick a lot of butt, so that'd be kind of silly. All right, we hit 200. We could get started. All right, first, I want to say I think E-Trade stole money from me, right? So when we put in our positions yesterday, we did live, right? And then towards the end of the day, I doubled up those positions and I posted in the group because when we went ahead and put those positions in, we saw that the stocks already came down a lot, right? Do you remember Facebook, I think was 328 and then it was 320 by the time we finally got to take a look at it. Amazon was up a lot and it came down by the time we got to take a look at it. And when we laid out our thesis to why we believe that Amazon and Facebook were ground zero for what we believed was about to happen this week, we said, oh, darn, it looks like other people already kind of caught on. Other people are kind of thinking the same thing we're thinking because these stocks already got sold. Now, the problem with that is if you are betting the stock to go down and you sell it and it goes down, good job. If you are betting the stock to go down and it was already sold and now it is down, can you still bet it to go down, right? So like if you believe a stock has a 75% probability of going lower, well, that's based on where it is, right? So the stock is 10, I believe a 75% chance it's gonna go lower, cool. Now, what happens when you get to the stock and it's 8? Is it still 75% chance it'll go lower? No, because now the number changed, it already went lower. Now maybe there's only like a 40% chance it'll go lower, whatever that odds are to you. That's what we were faced with yesterday when we were on our live together and we explained our thesis. By the time we finished explaining our thesis, the stock already went down significantly, so we purchased small positions, right? So in our portfolio, we had, I think, 20,000 available. And again, we were in all cash because we've been profitable all these weeks, right? So we had 20,000 cash, and I believe we purchased 7,000 worth. And the belief was if it was still higher the next day, we'd go ahead and put the other, 7,000 more on. But if you think about it, 7,000 plus 7,000 is 14,000, which means the portfolio sells 6,000. So when I went ahead and purchased it with you, I said, oh, it's already where it is. I'm going to purchase this amount. That sentence designated that I was purchasing an amount less than the full position I wanted to own because I didn't know where it was. Like I didn't know where it was going to go. The probability changed. And I even said, I'm going to have to watch this because there's a good chance this bounces back up later. And if it bounces up, then we're betting on it to go down, then we lose money. But if we believe that the outcome is going to be a lower stock, then a stock that's higher gives us the opportunity to sell it again at a higher price because now the probability changed. All right, the stock is at 10. We believe a 75% chance it's going to go down. The stock's at 8. We believe a 40% chance it'll go down from there. But if the stock gets back at 9 and we sold it at 8, well, then we're definitely going to sell it at 9 because now there's even a higher probability at 9 that it'll go lower, right? Okay, so we did that. And we posted it in the group and everyone knows it. And we did the 40% stop on it. So the XLC, which was the communications ETF, which is led by both Google and Facebook, with Facebook being the largest position in that ETF. And we identified it because it was cheap. right? If you wanted to short Facebook, that was a lot of money because everyone wanted to buy calls or puts on Facebook. Facebook was ground zero. Everybody wanted to play it. That was where the game was. Everyone wanted to be a participant. We, in our experience, know, all right, you guys are suckers. If you want to go ahead and spend all that money for that one thing, see you later. We're going to go over here where the cheap seats are. Like, oh, this ETF owns it. Nobody really knows about it. And we could short the ETF and the ETF will go down. If that stock goes down, great. Love it. I'll do that instead. So what did we pay? We paid like $1.35, I think, for each one of those puts. And then later in the day, I was able to buy them at $1.15. So my average cost basis was $1.25, right? So I paid $1.35, 20 contracts at $1.15, which means the average is $1.25. Cool. So I put the 40% stop in. So if it gets to $1.75, sell me out. I'm done. Cool. Now, after the market closed yesterday, Facebook did not do well. And I'm being very, very generous with that term. Because I also, in this boot camp, like if you were sitting next to me, right? And this was a boardroom, you know what we would do? Oh, we killed that thing. High five, high five, high five. Yeah, we ran. Wow. And that's fine because you're in a boardroom, right? That's kind of the animalistic depravity, the behavior of being a stockbroker, because you live and die by making money and then making commissions. That's your be all and end all. It's not good for you to go ahead and accept that type of behavior in your own life, because not only is it unbecoming of you, like act as if you planned on being successful, which means success shouldn't be a surprise to you. You did the work, you got the result you were looking for. Congratulations, you did a good job. You don't need to celebrate it, move on. But more so than that, when you celebrate it, you gain a level of omnipotence. You gain a level of careless, a level of reckless. Because when you celebrate something to such an extent, you think your own farts smell like roses. You think you're God. You think that nothing can stop you, especially when you get a win like we did yesterday. Facebook has never gone down as much as it's gone down today. Today is the single worst day in the history of Facebook stock. So when you go ahead and take a short position in front of on a company like Facebook a day before, an hour before predicting that it's going to go down, and it goes down the most it ever did in history, you did pretty good. Like that is something highly commendable. But if you believe that because that achievement was so grand that you deserve all the credit, you're wrong. There is no way in the world that I could have known that Facebook was going to have its worst day in history. I can go around and high five. Like the record says I got it right. The record says I went ahead and shorted it before the biggest down day in its history. And it'd be very easy for me to be like, yeah, duh, like look how smart I am. Yeah, I knew. There's no way I could have known that was going to happen. Zero chance. And for you to believe that you could have known is zero chance as well, which means you have to manage your own emotions, because guess what? Facebook could have gone up and we would be in a very different position today. Meaning, take everything with the responsibility it deserves. This is your money, right? There is no nobility in making money and then feeling so high on yourself that you could do nothing wrong, then going ahead and say, yeah, I nailed that. Watch this, I'm going to nail this one. Because when you get the next one wrong, you look like an idiot. Well, I don't want to use words like that. You look foolish. Like, let's take, for instance, our first week of the boot camp, right? We made 40% on Netflix, like that. Our account went from 20 to 24,000, like that. We then went ahead and purchased Apple options that Friday. So I believe it was the next day. And we purchased half our position and said, if it goes down, we'll purchase another half. And if it goes down, we'll purchase more. Long story short, that 24,000, if anyone remembers, got down to 13,000 within 6 days. So from 24,000, we lost 45% of our money from our high point. From just the 20,000 we started with, we were down 35% of our money. In fact, before Apple reported earnings, our account was at like 15,000. Now, of course, we went ahead and made the adjustments, but you cannot say a little bit of luck doesn't help. We don't know what's going to happen. We can make our calculations, we can make our probabilities, and we can say at least 51 out of 100 times we're going to be right. But that doesn't mean we're not going to be wrong 10 times in a row at some point. We just know we're going to be right more times than not. So for me to come out here and celebrate today would be quite silly, because I think our account is now 25,000 on a base of 20. So over, what's this, week 4 we've done this? So over 4 weeks, our account's gone from 20 to 24 to 13 to 25. Meaning we are up, what is that, 25% in 4 weeks, great. But we're also only up 4% from our first trade. So in 3.5 weeks, we're up 4%. After a killing like today. So can I really celebrate that? Or can I say, okay, well, I'm where I should have been, right? I'm where I should have been 3 weeks ago. So realistically, I'm behind where I need to be. But that's the respect you have to have for the market. You cannot tell the market what you think it should do. You can't. If you do, you will lose all your money. You cannot say woulda, coulda, shoulda. If you do, you will lose all of your money. And you will then go ahead and lose your money and sit there and talk to people that also lost their money and share stories about how, the market is rigged. And those people will agree with you because they lost all their money too. In fact, I bet you can find a lot of people that lost all of their money, and you guys can get in a big group together and talk about how the market's rigged. And everyone will agree with you. And you guys will be the group that has no money that agrees the market's rigged. Now, I don't want to be a part of that group. That group sounds like a horrible group. That sounds like a group that I want to drink cheap scotch on the linoleum floor and hope my kid turns out ugly so I can hate my life even more, right? Like nobody wants to be in that group. But nobody actually understands the work it takes to not be in that group. People, and that's the danger with stock market programs, right? Like platforms, like look how much money I made. Because everyone that makes money believes that they should be celebrated. It's a very low self-confidence and a very low self-esteem in somebody that feels like they need to be the loudest person in the room. Do you know why you don't know who the best money makers are? Because they don't flaunt it. They don't go out there and tell you about it. Because to tell you about it is a couple of different reasons. Either A, I think so low of myself that I need to celebrate myself so that you pat me on the back. Or B, I'm just so, I just want you to come to me and ask me for money because I'm telling you how much money I have, right? Because those that make the money understand that they only make that money because they have lost so much money, that they've had so many losses in their history that they know that when they are making money, it's because they're locked in, that because they are protecting their money, they are managing their emotions. They are not allowing themselves to get too high and not allowing themselves to get too low. It's the only way you can do it. Because so think about over the last 3-4 weeks, how we've made money, right? Like how we've been successful. And I actually look back and I say, we could have made a lot more than we did. That Apple, we've lost on one position, that Apple position that we lost 65% on. We were originally up 22% in a matter of 1 hour. That's an 80% difference. Now, when we were, oh my God, our account was over 26,000 at one point. In fact, we're not even as high as what we once were. Anyway, the point of the story is, in that moment, you know how different our account would be worth if we went ahead and sold Apple at that point? Because that Apple position is the one that took us down to 13,000. Instead, that Apple position had us at 25,000. So think about every 40% gain we've done since then. We've done a 65% gain this morning. The account would easily be worth over 50,000. Now, if we were over 50,000, what would I look like today? Exactly the same. Exactly the same. Because the market could take all of my money tomorrow. It doesn't change. We don't invest enough money for it to change our life, right? Like we're not trading money that makes the difference between us getting that car that we wanted versus not getting that car we wanted. Because when you go ahead and trade money that large, you are so emotionally invested. You are completely invested emotionally. You do not have non-biased opinion. You just don't. Because if you invest such a large money that you've already sold yourself on the reward of you winning, then that means when you're losing, you have a feeling in your stomach that does not feel good, because now you're not able to get what you wanted. But at the same time, what did you risk to do it? Then at the same time, what are you losing that you had, right? Like, I'm going to risk 70% of my checking account on this stock, because I believe if I make 40%, I can go ahead and afford that car that I want. Afford that car I wanted. Great. Now, not only did I not get that car I wanted, but I'm down 35%, which means I'm down half my checking account. And that checking account was going to feed my family. That checking account was going to pay my mortgage. That checking account was the X amount of money I put to my retirement, so X amount of money I put to my child's care, college fund, right? How do I feel now when I go ahead and sell everything and I lost that much money, and I look at my son or I look at my family and they say, can we go on vacation? And I have to make up some excuse. No, I'm just working really hard, knowing that the money I lost couldn't pay for vacation, right? You cannot look at the market as an ATM. It's not. Even someone that understands it as well as I do and has a performance like I do, even I don't look at it like that for myself. Like, I think if push came to shove and a gun was put to my head and someone said, Anthony, you have to come up with $100,000. Could I come up with $100,000 if you gave me 2 weeks to trade the market as aggressively as YOLO, you only live once? Sure. Do I think I could equally probably take it to zero? Yeah. But even I wouldn't do that. So I just want to say that so everyone has a proper context. Because if you, like, for instance, if you take yourself back to yesterday, we talked about two stocks. We talked about Facebook and why we believe their numbers and their stock was not going to perform well. That we believe the YouTube numbers and Google, because we can read a balance sheet, already told you Facebook numbers weren't going to be good. And we believe YouTube does better ads anyway than Facebook. So if YouTube missed, Facebook's definitely going to miss. And we believe that Facebook, because they're pivoting to the metaverse, is already saying something about their current business. Not only are they taking their focus off it, but they also believe it's not growing any longer, hence why they're looking for something bigger. But because Google went ahead and announced a 20-for-1 split, and because Google and Facebook trade together, Facebook was getting credit it never deserved. In fact, if you actually read through it, you would say Facebook deserved to be down yesterday. And if Facebook was down yesterday, the earnings wouldn't have been such a surprise. But because not only were they up on bad news, but it was completely cosmetic and everything got slammed, and that's what we said. We also made the same argument for Amazon. We said that because Google announced a 20-for-1 split, Amazon, who everyone has perennially waited and prayed and rumored, this has been going on for years. You cannot, if you talk to a single Amazon investor, they own Amazon for two reasons. One, it's e-commerce. Everyone buys on Amazon. And secondly, they're going to split the stock. I know it. They're going to split the stock because they believe that when they split the stock, they'll have the same type of performance that Google did or Tesla did last year, or even Apple did last year, because they've all split their stocks and the stocks went much higher. And we said, well, now Amazon is up because the belief is that they're going to split their stock because Google split their stock. Amazon should not be up on that because it doesn't even make sense. First of all, Google splitting their stock means that they're looking to get into the Dow, which means if Amazon splits their stock, there's only 30 positions in the Dow, which means now Amazon is versus Google to get a position that's not even open yet. Their position has to open down the road. But secondly, all the excitement of Google splitting the stock is already in the price. Those people bought Google. Now they're going to what? Sell Google to buy it? It just didn't make sense. And on top of that, Amazon's business model might be the #1 pandemic business model. Now, Amazon's been great for years, and it's going to continue to be great. It is a wonderful company. It's great, right? Like, we know that. But during the pandemic, it was like greater. It was super duper duper, right? Because you couldn't leave your house. So you went on Amazon. If you were not an Amazon customer, you became an Amazon customer. If you were an Amazon customer, you became an Amazon Prime customer. You went on Amazon. If you were doing e-commerce somewhere, you were buying things on Amazon and selling it over here, or you were buying things here and selling it on Amazon. Was like, if you were locked down and you participated in the pandemic, like we all did, you crossed paths with Amazon. You had to. You could not cross paths with Amazon. Meaning every single person in this entire country, every single person in the entire world went on Amazon at some point. Now, I don't know about you, but if every single person in the world had a moment where they either experienced it and liked it or experienced and didn't like it, I don't know what more growth a company could have other than just a natural growth level, right? 17-year-olds become 18-year-olds, 12-year-olds become 13-year-olds, whatever demographic is all of a sudden now in a buying phase of their life or an entrepreneurial phase. That's a natural rate of growth. Like that's just demographics. So of course, Amazon's going to grow, but in terms of the business growth, right? Like the rate of growth in the business, there is no way that we believe that it could be as high as it was. Meaning, not only do we think Amazon's numbers are going to miss estimates, but the extra oomph that it was receiving because of Google stock split led us to think like, we will short this all day. There is no reason in God's green earth that the stock should be where it is. In fact, Google single-handedly tormented Facebook and Amazon shareholders, right? So they should go call Google and say, hey guys, you really effed us. So that's why we shorted Facebook, and that's why we shorted Amazon as well. Now that Facebook position, why we said, I think E-Trade stole money from us, because we put the 40% on and options stopped trading at 4 o'clock. Options are only during the trading day. But as you'll see in our Facebook group, our option got sold at 4:06 p.m. Facebook already reported numbers. And in that report, they were able to see that the XLC went down, which means somebody projected what the value of XLC would be and went ahead and paid me by 40%. So I can't exactly be mad at that, right? Like I put in a 40% and I got a 40%. But the reason I didn't change the 40% was because I wanted to see what the numbers were. And if the numbers were really bad, I would then adjust them because obviously that 40% is probably worth 100% this morning. But E-Trade sold it on me. My wife goes, you should sue them. I would never in a million years. Well, how can I even prove what they did, right? Like yeah, I could show 406. It's the cost of doing business, right? Let's just move on. I'm not going to be upset that I made 40%. In what, 2 hours? I'm okay with that. Move on to XLY, the short that had Amazon as the #1 position. That short this morning opened up, I think, 585. It sold it right away from us because our sell order was for 495, 40%. 585 was 65%, which means it probably went higher throughout the day. But again, you gotta have a process. This is our process. If it hits that number, sold. We cannot look back and say, well, it hit that number, but it's higher. It's like I grew up in Catholic school my whole life. So I don't know the exact parable, but I remember Jesus went ahead and hired a couple people to fish, right? To fish. And he offered them a wage. All right, I'll give you $5 an hour, whatever it was. And he wanted to go ahead and catch more fish and he was looking to hire more employees. And to go ahead and get the other employees, that he had to give them a higher wage, like $6 or $7, whatever it was. And upon giving them the $7, the original 2 employees that got $5, like, yo, JC. And I'm paraphrasing because, well, maybe I should speak a little bit. They said, excuse me, Jesus, right? Why are they getting $7 and we're only getting 5? What did we do? We're working. And Jesus said, did I promise you 5? And they're like, yeah. Did I give you 5? Yeah. Then what are you upset about? And that's the point, right? When you take a look at the market, you cannot take a look at it and say, well, I got what I was looking for, but I could have got more, because that's completely emotional. That's not logical. Did you get what you wanted? Did you hit your goal? Then move on. So the reason I'm saying all this now is because if I did not make the mistakes in my experience before, right? Like Anthony didn't just teleport down to this globe and do this program today. I have a very, very long history of making mistakes in the market. If I did not make those mistakes already, what I would say is, yeah, did you see us now on Facebook? You should have done it. And if you didn't do it, don't worry. We got a great one coming up today. Amazon. And everything that I shared about Amazon is a reason to short Amazon. Here's the problem. Facebook already being torpedoed already hit Amazon. Amazon's now down 100 or down 130, whatever it's down a lot. So let's go back to the risk reward. If we believe Amazon was going to go down at $10 and we believe there's 75% probability, and now it's at $8, can I be as excited about Amazon going down? No, because the probability it's going to go down is less. But can I excite you to allow you to feel more confident about Amazon because I just showed you Facebook? Yes. And that's Wall Street 101. They go ahead and they're completely uneducated, right? Like it's a bunch of salesmen that have no idea how the markets actually work, but they go ahead and prey on emotion, which is why we went ahead and built this platform so that we can show everyone a better way. And I always believe that if you have a stock platform, you shouldn't charge anyone any money. Because if you're so good at what you do, you should be making money by doing it, right? Like the money that I've made is because of you. I was not trading money on a daily basis. I decided that I wanted to go ahead and do it in front of everyone so that I could welcome more people into Rhino. So the money that we've made is me paying myself for this platform. And in a 4-week period, making $5,000 equals what? $1,250 a week. I paid myself $1,250 a week to go ahead and teach a boot camp. Therefore, there's no reason to have ever charged anyone anyway if you're actually good at what you do. And if you're not good at what you do, you shouldn't charge people anyway, right? Like you're not good at it, so don't charge for it. So the long and short of it is, I really, really want to make sure that first I share with you that if you want to do this professionally, and I mean professionally in terms of standards, if you want to have standard, if you want to actually have a real chance to make yourself money, this is what you need to look like. You would never be able to tell. Like if you just tuned in right now, you wouldn't know if we just shorted this third largest company in the world in front of their worst day ever in their history. You would say, Anthony doesn't look excited at all. No, it's because that's what we expected to happen. And it happened. Good. It does not mean anything. So I grew up under a father that really, really was very difficult, right? The only way to actually express that you love him was to go ahead and see what you've become based on his really, really difficultness, right? Like I'm the hardest worker I know because I couldn't be anything other than that growing up. I have a certain tolerance for good and bad because I couldn't have anything other than that. In fact, when I was in the stock market as a kid, when I was younger, and I would come home and say, yeah, I killed it with the stock. I bought, I'll tell you this, right? So I bought Apple for my clients before the iPhone was ever introduced because, well, not that the second it was introduced, it was at the CES, Consumer Electronics Show in Vegas, I think in like 2007. And I saw Steve Jobs get up there and present the phone that he was able to touch. And because I was a dork, I actually watched this stuff, right? Like imagine a stockbroker that did research. And I said, this is the coolest, this is exactly what the world wants. Like I knew it. I bought thousands of shares at $80 stock, thousands of shares at $80 a share for all of my clients. Well, after a day or two, and everyone was talking about the prospects of this iPhone, the stock went to $90. Everyone made a lot of money. And my father's like, oh, great. How much did you get paid? And I was like, nothing. I didn't sell it yet. He goes, why didn't you sell it? I go, because it's going to go higher. He goes, can you guarantee it's going to go higher? I go, no. He goes, but can you guarantee that you have a profit now? I go, yeah. He goes, you are only as good as your last trade. Get that through your head. It does not matter what walk of life, you are only as good as what you did recently. Because you can say Apple goes to 90 and then goes down to 70. Do you think these people are going to cheer you because you were right, but you had no benefit of it? And he goes, not only that, not only should you sell the stock here because you need to get paid because you only make money buying and selling stock because we got paid commission, but now you need to get off it and go find the next idea. Because if you don't find the next idea, yeah, great, you did good there, but now what good are you? Do you think your clients are going to celebrate you for what you did in the past, or are they going to celebrate you for what you continue doing and what you do in the future? And you know what? It's a really, really mean message. I was like 19 years old. And, but he was right? Like, so the moral of the story is, yeah, we did Facebook. What does that buy me? Does that mean that I can go ahead and buy a stock now and it goes down and you're like, oh yeah, but we did Facebook. I know I lost money on this one, but you did Facebook. Does it allow me to have one bad stock? Does it allow me to have two bad stocks? Does it allow me to have three bad stocks? How many bad stocks do I have to have in a row now for the glow of what we just did to wear off? Meaning everything that happened already happened. There's nothing I can do about it. And it does not do me any good to cheer it or lament it. The goal is to now, what are you going to do next? Yeah, Ant, you did it. What's next? Because if you cannot continue doing next, it doesn't matter how good you did, you're worthless. And that's really, really difficult. And I think that's the difference between family and business, right? Home and office. At the office, you are completely measured on what you do every single day. What have you done for me lately? And what are you going to do for me? And what are the chances that you're going to get it done? That's all you're measured by. If you believe in the office that you're measured by anything other than performance, you're cuckoo for Cocoa Puffs. But that's what home is. You can have a bad day and your wife still loves you. You can have a bad week and your wife still loves you. You can walk home, you can go home and have had a bad day at the office and your son still looks at you and laughs because you're his hero, right? Your family is your family, your office is your office, which is why you leave work at work and you leave home at home. Because in the office, I'm a completely different person than at home. Yeah, when my wife texts me, I'm still Anthony, I'm still her husband. But I'm like, hey, babe, gotta go. And she's like, I get it. Like, he's like a complete Rhino. He's like in his office looking to find ways to go ahead and take over the world so he can give it to everyone. At home, though, I don't even look at myself and I put it off on the side. At home, I'm just dad, right? Like, I sit there with my son and fly around the house with him and he drools all over me. We have a game that I pick him up, I'm like, don't drool on me. And he laughs and he like actually puts his finger in his mouth and like tries to drool on me. I'm like, A, that's really smart that you know this leads to this, leads to this. But B, you're like really diabolical. Like, I mean, like, don't actually drool on me. But see, that kid is competitive. He's like, oh yeah, watch this. Blah. So it's fun. So anyway, that's my story. And the goal now is, okay. I see Rod wrote something. I'm going to read that in a second. But the goal now is what's next. So let me read what Rod wrote, and then I'm going to talk about what's next. One of the things Anthony. Oh, so Rod, you wrote that to host and panelists, but I think this is for everyone. One of the things Anthony does best is give you the tools to make your own decisions. I decided not to put a 40% profit sell order on XLC. I held XLC overnight and closed my position with 186% profit this morning in less than 24 hours. Oh my God. You know, I'm going to say something. Of every single person that's in this platform, I aspire to have the performance that Rod has. Just saying. That's amazing. Rod, I really, really appreciate that. Let me see something. If I could actually, am I able to repost that? Does that work like that? Let me see something. What's this? Your computer. Yeah, so if you can see that, I just reposted what Rod did. It's just it's a little screenshot of it. Rod, 186% profit. That's amazing. Actually, Rod, to that point, I'm actually going to reach out to you one of these days. For those that don't know Rod, his specialty amongst like being an amazing human being is messaging. He is so skilled in literature and he's a best-selling author. And he's really like, I'm not going to go ahead and expose how high up he is in terms of resume. But point of story is, Rod, for us here at Rhino, we are doing the launch for Rhino search engine April. I'm actually going to be traveling the country on a weekend basis. And my biggest challenge is messaging it to be coherent, short, understandable, analogies that everyone can grasp from. And the short times that we've had on the phone, you're just masterful at it. So I'm going to what's it called? I don't know. I'm going to call on the reciprocity a little bit and reach out to you. Anyway, okay, so what's going forward? Let me take a sip of water and then let's talk. Now, everything that we shared about Amazon does still have value. So one could say, Ant, I know you said all these things about Amazon and you believe Amazon's going to go down. And you went ahead and took a short position on it yesterday and it has gone down, but Amazon's numbers are tonight. Like the real thing that you were expecting was that when their numbers came out, that's when they were going to get beat up. Now I understand that Facebook numbers already gotten beaten up, has scared people. And because the market's down, has scared people. And Amazon as a result, is already down 130 points. So is it still prudent to short Amazon? Well, the answer is I don't know, right? Like, do I believe Amazon can still go down? Yeah, I think Amazon is probably the most dangerous stock in this whole market. I think when you take a look at a stock like PayPal that got annihilated, yesterday was PayPal's worst day ever. PayPal's a really big company. Today was Facebook's worst day ever. Facebook's a really big company. Netflix, week one, was their worst day ever. Netflix is a really big company. The point is, every time one of these companies blow up, it is exposing how offsides investors are, how over leveraged they are, how when one thing goes wrong, everything blows up. Now, Apple went up. So the market is showing you that there is still last man standing. You cannot have a crash if there's a last man standing, because that means that people are still safe somewhere. It's only when everything falls apart that it falls apart. Now, Apple, if you can remember back in 2007, 2008, subprime mortgages, remember the subprimes were blowing up, and Ben Bernanke, because the Fed lies about everything, oh, subprime is contained, don't worry, it's not going to move to prime mortgages, not a big deal. Well, it's all lies, right? Because the subprime, the people in there were getting blown up so that they were pulling their safe money to go ahead and cover losses, right? So if I go ahead and I own a subprime mortgage and the thing goes down, well, I also own subprime, I own prime, I own super prime, and I need to cover my losses here. Where's the money coming from? Am I pulling money out of my pocket to cover that loss? No, I'll pull it from this investment. This investment's doing good. So as I pull money from that investment goes down. How further down can that go before people are like, oh my God, this is going down. Let me take all my money out of it. That's what's going on in the market right now. Apple is where all the safe money is. Apple, if you can imagine, is like a big treasure chest where everyone's hiding their money. But people also believe that they can hide their money in Facebook because they saw what Google did. Even more so, they just believed, all right, I can hide in Facebook. I know that the market's doing all this stuff, but I can hide in Facebook. Well, guess what? It got blown up. Now, the last company, the last mega cap, super big company that has growth trends as far as the eye can see, that has perennially did amazing every single year, who grows faster than any company, who everyone could agree. Do we think e-commerce is growing? Great. Amazon, do we think they're a monopoly? Yes, great. Is Amazon. There is a lot of money hiding in Amazon. There just is. Amazon sitting at what, under 3,000? Most people think is a buy of a lifetime. In fact, there are people in Amazon right now that are like, okay, whatever. Maybe it goes down to 2,700, but I'm cool with that because I own Amazon. If Amazon comes out and those numbers are bad, Amazon will get chopped down to 2,500. It will. And here's the point. Because we are able to identify Amazon as the last front lines, right? This is the last place people are actually, it's the last huge mega cap with super mega growth trends that is standing. We know that people are hiding in there, which means their earnings are very telling. It means their earnings are market moving, meaning if their earnings are good and the stock goes up, then we can start buying stuff again, because now we have a belief that people feel safety in the market. They feel safe that they're in Amazon. Amazon protected their money. They did not lose their money. Now they can say, okay, the rest of the market could look and say, okay, there are things being judged on its own merits. You see, the problem with the stock market in terms of investing is not the calculations, right? So you can look at a company and say, okay, this company is going to grow at this rate. It's going to make this much money this year. Cool. Here's what the stock market does, though. You have to put an earnings multiple on it, because investors buy future growth. So if you believe a company is going to earn $10 next year, what are you willing to pay for those $10? What's the earnings multiple? So if you look at every company, they have a PE, a price to earnings multiple. So a company like Google that grows, say, 20, 30% a year has an earnings multiple of 22 times, meaning it'll take you 20 years to go ahead and fully earn it'll take you 20 years to buy what the company's worth, right? You're paying 20 years in advance because you believe that the growth of Google is going to continue accelerating, that the next year or the year after that, if it stays at a 20 multiple, the stock would have been higher because it grew faster than the 20% growth it was already doing. I know that sounds confusing, but the point that you need to take from this is a stock price is two components, earnings and multiple. Now, the multiple is completely arbitrary to investor sentiment. If everyone believes the market's doing great, the circus is in town, everyone's doing well, they feel comfortable paying up for those earnings because they believe that those earnings are going to happen. They believe other investors will go ahead and participate as well because a market is participants. A market is buyers and sellers. The earnings multiple is based on sentiment. If somebody feels good and the market is good, then they believe other investors will feel good to be a part of it. And the more people buying the same thing means the higher price because you have more people bidding for it. So the earnings multiple is completely dependent on sentiment, which means when you see these stocks flying up and down, it's not that their earnings are changing, it's that the multiple is changing. What is the sentiment of those investors and what is it that they're willing to pay for those earnings? Therefore, for you to have confidence in buying a stock, you need to have confidence in the market overall to pay a high earnings multiple. How can you go ahead and calculate the sentiment of investors? Well, it's like anything in real life, right? If you are afraid to walk out the house because you think someone's going to shoot you, you're not very confident in doing anything. That's Apple. Apple allows you to believe that there is at least one place that you're safe. You can walk out your house and not get shot. But can you get in your car? Well, that was Facebook. There was a bomb in it. It blew up. All right. Can you go to the store? No, that was Netflix. That blew up. Can you talk to the Candyman? No, that was Peloton. That blew up. All right. Can you go to your neighbor's house? That was Google. Yeah, you could do that. All right. So I could go outside and I could go to my neighbor's house. All right. So maybe I could buy clothes because I want to be seen. Amazon is that next thing. Can you get on the bus? Right? Like, can you get on a public whatever? If that blows up, whoa. Well, then I don't need to buy clothes. I'll just stay home. The point being, all of these are pillars of the market. You cannot have a market that people feel comfortable in if the largest companies in the world that are the highest growth, the best of the best, are getting blown up. Because if they're getting blown up, everything else is going to get blown up. Because you have to understand how earnings season works. We're in earnings season right now. The best and biggest companies report first. So the companies that are reported, Apple, Facebook, JP Morgan, Tesla, Google, blah, 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 they're reported. These are the biggest and best companies in the world. Well, if the biggest and best companies report first, then who reports second? Who reports third? Who reports fourth? If the biggest and best companies are getting blown up left and right, what do you think are going to happen to the second biggest and third biggest and fourth biggest? Well, their numbers are not near. Do you think Snapchat, who reports tonight, is going to have good numbers after Facebook just got annihilated? No, they're not. But the Facebook getting annihilated sells Snapchat so far down that the expectations for their earnings are now complete garbage, that anything good is going to move it up. That's what we have to look at. Is everything getting blown up hurt Amazon so much that the expectation is so low that anything they report makes the stock go up? Because you remember, when you take a look at the market, the number one way to understand sentiment is to see how stocks react based on news. If a stock gets good news and goes up, you're in a good market. If a stock gets good news and goes down, you're in a bad market. If a stock gets bad news and goes down, you're in a whatever market, right? It went down. If a stock gets bad news and goes up, you're in a really good market. You're in a market that all the bad news is priced in. Everyone knows the bad news. So the question then becomes for Amazon, A, did they do so much better than what I'm projecting, which I think is rational, right? Like I don't see anyone disagreeing with me. Obviously, Amazon's business is better in pandemic than not pandemic. And that's just, my common sense 101. So is Amazon's numbers better than what they're projecting or what the investor community is now expecting, or is it not? Can Amazon come out with a disappointing number and still go up? Or is Amazon going to come out with a disappointing number and get annihilated? I don't know the answer to that question. Because the probability that they get annihilated is vastly different today than it was yesterday. Because, for instance, say, for instance, you are walking into a store. You have confidence you're going to walk in and be fine, right? The person, you see someone walking before you, they come out with paint all over them and their shirt ripped off. Are you still feeling as confident walking into that store? No, you're like, I just saw what happened to that guy. Amazon's like, I just saw what happened to Facebook. I don't know what's going to happen, but I'm like hunkered down now. Like, what's going on? Because they're hunkered down, the investor sentiment is hunkered down as well. The expectations for Amazon have been lowered, which means when they go ahead and post a bad number, if they do, how much of that's already priced in? How much do people expect already? So you have a dichotomy here, right? Amazon's the last pillar. Does it stand or does it fall? Versus the expectations are low. Do they go ahead and supersede them, or do they crumble in front of them, right? Same thing with Snapchat. Snapchat, for all intents and purposes, is a social media platform that is not profitable, but has a high growth rate going forward. And people have always paid for Snapchat because the belief that somewhere down the line, they're going to monetize. But as long as they go ahead and add subscribers, they'll get to the monetizing thing when they get to it, right? As long as you can get the population first, then you figure out how to monetize them down the road. That's what people always believed with Snapchat. But now everyone's like, no. Listen, sentiment's not good here. You are not getting a pass for being an unprofitable business that just gives away free stuff. If you're going to give away free stuff, you better start making money, or you know what? I'm done owning you. So Snapchat, put up or shut up. Let's go. So you have Amazon and you have Snapchat reporting tonight. It is my belief, based on everything we just went through, and plus, remember what our belief is going forward. We believe the market's where you need to be. We believe that if given the option between giving money to the government or giving money to corporate America wins 100 out of 100 times. Nobody, in those earnings, Facebook actually bought 20 billion of their own stock last quarter. If they bought 20 billion of their stock over 300, what do you think they're going to buy under $300 share price? It's conceivable they're going to buy more stock. Companies are buying their own stock right in front of your face. Big investors are buying company stock like Bill Ackman buying Netflix. Big companies like Microsoft are buying out other companies like Activision. Facebook's buying their own stock. This is all happening. So if corporate America is saying they believe in corporate America, and anyone with a calculator could say, why would I lend the money? Why would I lend the government's money when I could go ahead and lend it to corporate America? That's where you want to be. I guess where we are now is, when is the point that you say, okay, this is the bottom? When is the point where you say, okay, it came down enough for me, I don't care, I want to own it here? Now, what our platform measures, or at least going back to the story, you're only good as what you did lately. Like, for instance, if I say to you, hey, listen, Facebook at 250, that's a great deal. A year from now, it's going to be up. You should buy it today, which I would never do because I don't suggest things, but I'm going to buy it today because I know it's going to be up a year from now. Are you going to tune into me every single day while we watch Facebook go down, 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 up, down, up, down, up, down, and actually tune in every day so that a year from now, when it's up like maybe 5 points, if I'm even correct, you're going to say, wow, Ant, you know what? You're good. You were able to buy something and hold it for an entire year and actually make some money on it. I'm happy that I followed you every day. No, I don't have that luxury. I do not get to go ahead and demand your attention by doing something so unimpressive. In fact, I have to go ahead and pull a rabbit out of every single hat, because I have to go ahead and demonstrate that no matter what the situation is, this is someone that is competent. This is someone that is skilled. This is someone that has a higher degree of skill than others that you might have come across. Meaning, I have to go ahead and say, I don't have the luxury of saying, well, I believe the market's going to go up, but it might go down a little bit, so I'm going to buy it here. I can't do that. I have to make sure that I go ahead and pinpoint where I want to do it for me to be smart about it, which means I'm not buying a single thing today. because things have changed. Everything is down. Now I have to allow the market. I have to put my pride aside. I have to put that rah, high five, I know everything in the drawer where it belongs. That's where it stays. What I need to do is now take a look at the market and say, okay, I've identified 2 stocks that I believe are going to tell me, they're going to give me the answer on investor sentiment. They're going to give me the answer that I need. So why am I going to guess what it is? Do I need to go ahead and make a trade today just because I think I'm so great? No. Let me go ahead and watch them. Don, I don't, because I'm not smart enough to do that. And I know that sounds facetious, but I'm really just not. I'm one of those that I believe that when I'm right, I'm right, and when I'm wrong, I'm wrong. And if I'm right, I want to be fully in, and if I'm wrong, I want to be fully out. The hedging, I find, takes a certain level of mental energy that just annoys me. And that's just me talking about me. Who does do that? Brooks. I haven't seen him in a while. He is part of our group, and you are part of Rhino Premier. If you go ahead and @ Brooks Allison, he's fantastic. He's one of our favorites. And I'm only saying this because he's been a participant for the whole entire year. So, and he's a friendly person. He actually emails me often and just gives me some ideas. He's the master of spreads. In fact, he's writing a book right now about option spreads. Like, that's how high qualified he is. So if you would like to learn about that, Brooks Allison. All right. So let's go ahead and take a look at the market. I spent 51 minutes talking. We do need to do some work, right? Okay. I don't know why that does that to me. Okay. All right, so let's see what's going on here. So the market's down 236. Why is that important? This morning, it was down only 40 on the futures. And then when it opened up, I think the futures were down 100, 150. Now it's down 230. So it's exacerbating, right? The S&P is down 1.2% versus Dow that's 0.6%. Now, why is that important? The Dow is what we call the trophy assets of the country. The Dow is the 30 biggest and best companies that this country has. It is the trophy. So when you have money flow from other countries into the US, they don't buy Snapchat. They buy the Dow Jones. So when you see the Dow outperforming other indices, you can know off the top of your head that either there's less selling or there's more buying than the others. Well, duh, and that doesn't really tell us anything. But you have to know who's doing the buying and who's doing the less selling. When you see large sovereign equity funds from other nations selling less and or buying more, the belief is that there is money that is supporting the market. There is money that if the market gets to a certain point, they're coming in because they're doing it right in front of our eyes, which allows us a little more comfort, right? Like, these are things we need to know. Also, the S&P has Facebook and the Dow doesn't, so obviously that's pulling it down. The Nasdaq's down 2.03%, 2.04%. I believe it might have been down more earlier. We're gonna have to take a look. The Russell's down only 0.5%, so small caps are like, either they've gotten beaten up so much and all the bad news is already in them, or they're just immune to this, which is weird. You would think this would be down more. So we got to take a look. And the VIX is up less than a point. The VIX has 22. That doesn't sound so scary. So I don't know, right? So let's take a look at stocks, right? Can we follow you on TradingView? No. Follow me on first of all, I don't know how to do that. And second of all, I don't really do anything on TradingView that I think I like what's shown. I don't know what following me offers. And I don't want to give away the algorithms and stuff. So I'd have to be a little more educated what that means before I could give you an answer. All right. So let's go to QQQ. Let's do a little bit of work. Okay. So this is daily. And what do we see? Okay. All right, so we see right now, all right, let's just delete these last ones because I don't feel like following up on a story. I like telling the story. And presumably the story should be the same anyway, because it's not like we're doing different things every day. It's not like our rules change, right? Okay, so let's just get rid of this nonsense. All right, so what do we see? So when the market bottomed, and that was Monday of last week, the stocks went up, right? Right. During that same point of time, this needs to go away. I want a clean look. Okay. And you might be saying to yourself, Ant, we already know this story, but the muscle memory of doing it and getting yourself in the position to tell the story is for your own benefit. And I'm not saying me doing it's for your benefit, me doing it's for my benefit, which presumably is your benefit, right? So let me just do it correctly. So when we bottomed, stocks went up and volume was going down. But that was a capitulation day, so volume should be going down, because by definition, capitulation day is when everyone's in. Okay. Now we see stocks are moving sideways to down a little bit, right? And we see volume continuing to move down. Okay, well, actually, let's look at volatility. So volatility is up over here. And volatility is coming down here. Okay, so stocks are moving sideways, volume is moving down, and volatility is moving down. And what that means is people are becoming complacent, but there's less people participating. Therefore, the move should become more erratic because there's less people participating. Okay, so now stocks move up, right? But volume's still moving down. And volatility is moving down. Okay. Then we have stocks moving up over here, right? And we have volume still moving down. And volatility spiked up. And if you remember, we started the call yesterday by saying that we've been seeing this market moving up while the volume's moving down and the volatility getting to the point of complacency. Like when the volume's moving down, it means that's the lie detector test. There's less people that believe this move. But the volatility moving down it means everyone's become complacent. The participants in the market believe everything's fine. And that's a recipe for us to say, well, we don't see the lie detector test working. We don't see more volume in, which means the only people in the market are like the do-to-dos that don't really know anything. And they're completely complacent, like everything's okay. Therefore, we want to take a short position. That was the origin to the thesis that led us to Facebook and Amazon. And to Don's credit, Don even asked yesterday, well, why don't you just short the QQQs? And I said, you can, but we believe that ground zero is Facebook and Amazon. And because we have a thesis that's unique to those particular companies, we want to go ahead and exploit those companies, which it worked out, right? So now we take a look and we see market down, right? Now we can't measure volume because this is a day volume, and obviously the day is short. But in our experiences, we can say that the volume is going to be up. And if it's not, so let me not put that there. We believe this volume is going to be up. And if price is down and volume's up and volatility is up, that's really bad. We don't want that. So we're not going to buy anything. But does that mean we want to short anything? Shorting something is going to be completely determinant on what we see in market reaction. What is investor sentiment? So here's the entire game. These two companies. These two companies are completely in charge of what we're going to do tomorrow. Because I'll tell you something with Amazon. Now, everything I shared about Amazon was unique to me. Like my brain put it together. But my brain put it together on all the experience and everything that I've witnessed. I'm not the best investor in the world. Therefore, the belief is there are people that are smarter than me that would have seen the same exact thing. That being said, those people that are smarter than me, I tend to want to watch. I tend to want to follow. So if I can go ahead and make that assertion for myself, then I can also by default say whatever Amazon does tomorrow, the smartest people in the world are telling me what their belief is. And here's the thing about beliefs. Everyone has one. It's like a butthole. Everyone has one. But in the market, the belief matters because the market moves on money. And the person with the beliefs, if they are the people with the money as well, you then want to listen to what they say. Because if their beliefs are represented by their money, and their money is the big money, then you want to know what they're doing, because by following them, that's what makes the market. You want to follow the money flow. If I had to summarize how to beat the market, follow money flow. Sounds easy, 3 words, but it's really hard. Is money flow 2 words? I don't know. Anyway, so what you'll see is Amazon's pretty much on the lows of the day. It got as high as 28.84, so people tried to like, all right, it's low, let's get back in. And it's not working. Meaning the expectations for tonight are progressively becoming much lesser. If you said to me, Ant, what do you think is going to have to happen to Amazon? I think they're going to get annihilated. But here's the point. If I believe that, then other people believe that, which means that belief is priced into the stock. Meaning, if you believe the stock is going to get annihilated and you sell the stock in front of believing it's going to get annihilated, did the culmination of all those sales already price in the annihilation into the stock? Therefore, the people that believe it was going to be annihilated are already out of the stock. They can't sell it. Therefore, the people that are left are the ones that did not believe it's going to get annihilated. And if the numbers are even just somewhat okay, why would they sell it? They never believed it was going to get annihilated to begin with. Only the people that believed it was going to get annihilated are the people that sold it already. That's a long form of saying stocks price in all known information. Meaning, if we already believe it's going to get annihilated and other people believe it's going to get annihilated and everyone sells it because they believe it's going to get annihilated, does it still get annihilated? Sounds a bit philosophical, but that's something we can't answer. But if it still gets annihilated after everyone that sold it because they believed it was going to get annihilated got out, that means it was so bad that the people that did not even believe it could get annihilated now are like, whoa, I didn't even realize it was that bad. It let me out. And them getting out is the annihilation. So, because that's a lot of moving parts, do you think I would ever put my money in a position that has that many moving parts? No, never. I really don't know what's going to happen. But I do know that watching how it reacts tonight and watching how it reacts tomorrow will tell me everything I need to know. If this stock flies tomorrow, then people were wildly pessimistic and everyone's going to run to the market because that means everything was priced in. And that's kind of what the Russell's saying to you. The small caps, they're saying to you, yeah, we got beat up. So let's go take a look where it is, right? So this might be another key to the market. So let's take a look at the Russell 2000. Now, these are the 2,000 most economically sensitive stocks. Okay. The Russell in November was 244. The Russell, presumably Monday, was 188, which is a 60 point swing, 60 on 240s, roughly 25%. So you have an entire index that went down 25%. That's a lot. To put it into comparison, the NASDAQ went down 16%. The Dow went down like 10%, and we're running around with our hairs on fire. This went down 25%. Now let's take a look at how it's reacting though, right? So let's put an overlay of the NASDAQ on this. All right. So as you can see, the NASDAQ's been outperforming it, right? So you could go all the ways back and look, this is the NASDAQ line, this is the Russell line. The NASDAQ's been doing better. In fact, look, it's doing better. 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 Today's the first day it's doing worse. So what does that mean? I don't know. But I would say that if the index that's been doing better is now finally doing worse, then you can conceivably say that this index kind of priced in everything. In fact, I bet you if we do that comparison again, and we do a 5-minute chart, right? What the hell? Well, that doesn't seem like it's fair if I could go ahead and move one and not the other. Okay. I don't know. This really isn't helpful. But what I would say is, oh, that's why that was there. Okay, anyway, what I would say is that the Russell 2000 is looking to say, hey, listen, you beat us up enough, like, please stop, we're done, we're done. So how could we say that? So it's going up, down volume. But volume is the same over here. I mean, it went down on the day, but now it's going down. So we're gonna have to watch the Russell because the Russell might actually be telling us something too. So let's put that on our list. Let's take a look at Snapchat. Okay. Oh, man, you know how hard it is when a stock, it's funny. Like when we look back at the stuff we've done, there's the trend line, there's the channel, bumped, bump, support, support. You could hear me saying, guys, if it breaks this line, watch out. Oh, bo, 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 bo. Because everyone on Wall Street has the same charts. They all do the same thing. They're like literally the least impressive people in the entire world. All right. So where are we on Snapchat? All right, it's down, red and green, was 10 red and green, popped up. Has it ever been lower than this? Yeah, over here. So where are we right now? We're over here. So this looks like a good reference point. Like, look at all this reference over here. But the bottom of this reference is 21. It's now 25. It's towards the top of it. So I can say that if Snapchat went to 21, it'd be a good buy. It'd be a good spot to buy. The point being, now that we have reference points and now that we have a story for Amazon and Snap and IWM, which is the Russell, we can take the day to see what they're doing. So I know that we went over, it's now 107. In summation, we must watch Amazon and Snapchat and see how they react to those earnings. The consensus for Snapchat is these are going to be the worst earnings. How is Snapchat a company? They should go to zero. They're already worthless. They don't make any money. Everything bad that you could say about a company, Snapchat actually deserves. TikTok is taking them out. Facebook now, they're going to focus more on Reels. How is Snapchat even a company? Someone should buy them out, blah, blah. And that all sounds good. Honestly, if Snapchat went to zero, I would believe it. Here's the point. The fact that I could believe that that company could go to zero means that I've priced in my head so much pessimism. If this stock goes up, it means all the pessimism that everyone priced in is already in, which means the only way to go is up from here. With Amazon, this is the last pillar. This is the last place people are hiding. This is the last trust that anyone's going to have in this market. Does it stand or does it not? It's going to tell you more about the market. IWM, does it recover? Do we start seeing small caps outperforming? Do we see the most economically sensitive companies that have gone down the worst start showing you, hey, listen, things aren't that bad. We're good. We're fine. We already priced in all the bad news. Those three are going to tell us what to do. Now, as you can see, we have a super duper list. These are charts of interest. Qualcomm, if you were looking, like if you were just like, I need to gamble on something, Qualcomm had really good earnings and they're being taken down by the market. Qualcomm CEO is going to be on Fast Money or on Mad Money tonight with Jim Cramer, meaning he's going to have an opportunity to share his story after hours, meaning all that after hours action is very thin. There's not a lot of people that trade after hours, so it does have the possibility, if he says something good, to push the stock higher. If the market starts up tomorrow and he says something good, it is conceivable that Qualcomm is 5, 6, 7 points higher tomorrow alone. They have good earnings. They have the CEO that's going to tell a very friendly story on the most watched network. If the market starts up tomorrow, they're going to be somewhere that's going to make money. So if someone forced a gun to my head, I would take a flyer on Qualcomm, but I'm not going to. Caterpillar looks interesting to us. Now, if you take a look, there's companies that are up on our super duper list, right? And by the way, I want to highlight this, then we're going to go. Because in our letters that we sent out when we were doing the red and greens, we highlighted XELA, and we said we don't trade penny stocks. But for those that do, this is a 23 red and green, 24 red and green, 25 red, and the stock kept going down. But we always said if it's that high red and green, something's happening. Like there's money coming in. There's a coiled spring. I don't know when it's going to bottom, but when it does, I stop talking about it because I'm like, this goes down every day. I don't want people that are looking for penny stocks to buy. Like if they bought it, they know it, right? And then what you see is 27 red and green. It was what? 38 cents. A week later it was 96 cents, triple your money. So, food for thought, whatever. 20s red and green works. How long you got to stay in it is a different story. Do you have the stomach for it? But we're comfortable with it. All right, so that's all for today. We're going to watch Netflix. We're going to watch Snap. We're not buying anything today. We would like to buy some stuff. If we can tomorrow, we will. But that's that, I think. So let's stop the share. Do I have any questions over here? No. Really great group. Everyone stayed. We had 400 people attend this meeting today. Very good. Oh, Don, I know we have a 2:45 today. Can we move it to 3? Because the Zoom I use, V uses for Rhino, and Zoom is tricky. I don't know how to sign on and not have my name, and I don't want to pull her off. So if you say yes, can we do 3 o'clock? I'll jump on the Zoom. Perfect. Mind you, just to point out to Don is that Don does a lot of SEO work, and he's a podcast and content provider that we trust. This is actually the second time we're going to be with him. So if someone has an interest, you should really check him out. Don, you know what? Tomorrow, whenever the content is done, let's send it to the group as well. We'll post it in Rhino Wealth. And if others would like to participate in what you do, I think it'd be cool to let them. Thanks. Cool. All right, everyone. Love you so much. And I hope everyone is counting their money. Everyone should know that Rod is up 186%. So go talk to him. Let's see if he sends you some Chipotle, right? Love you guys. Bye.